Hey guys, just want to do a quick earnings preview for Nvidia, which reports tomorrow. What to expect, what to look for. We'll touch on some fundamentals, what the analyst community is looking for, what they potentially could say, what should you be looking for on the call, and then we'll go over some technicals. Okay, so let's start with the fundamentals first. Let's get that out of the way, and then we'll get to dessert. Okay, so basically tomorrow for earnings, really the primary focus for Nvidia is going to be on margins. Margins are going to be huge. Remember one thing, when you're getting EPS and when you're getting revenue, it's always backwards looking. It's what took place, not what's happening moving forward. Guidance is really what sets the tone of the stock. They could knock the cover off the ball on both earnings per share and revenue. But if guidance comes in low, less than what's expected, or they tamp down expectations for moving forward on either revenue or earnings or even primarily margins or inventory, that could literally crush the stock. So don't just focus on the headline number. The headline number is great and it's nice, but again, it's backwards looking. We're looking forward towards what the sales are going to be moving forward. Again, forward, not backwards. Okay? Fine. So, right now, the company already has guided gross margins down for the current quarter to be at about 71%, which was lower than the fourth quarter at 73.5%. Okay? Analysts that are being polled by FactSet are projecting 88 cents in earnings per share on sales of 43.2 billion. That's what the expectation is. 88 cents a share in EPS on sales of 43.2 billion. If they don't come in these numbers, if they come in lower, it's going to be a problem. If they come in higher, the stock is going to get a pop, for sure. But again, remember, guidance. What are they going to say about where margins are going to be next quarter and moving forward throughout the end of the year? Okay, so just remember that number, 88 cents a share on 43.2 billion in revenue. Analysts at Oppenheimer are expecting to see results that are going to be roughly in line with the July quarter outlook, despite, and this is the important one, despite the loss of H20 chip sales to China because of government regulations, government restrictions on the US side. Okay? Now, when it comes to the H20 chip, which is going to be on the call, and he's going to be asked about it, okay? Nvidia has already written off about $5.5 billion after the Trump administration said that they're going to need a license to sell their H20 chips abroad. The analyst community believes that Nvidia is probably not going to get this license, okay? Which means there might be even bigger write-offs coming down the pipeline, okay? However, with that being said, Jensen has already been on record. He's been on TV earlier this month. He's been on TV a little bit, and his expectations for China AI is that their market could reach about 50 billion in the next 2 to 3 years. So the growth potential in China is almost limitless, and the possibilities for growth there are tremendous. But if the government doesn't allow them to sell there, there's going to be restrictions. They're not going to be able to tap into that market, and it's going to have an adverse effect on the stock. Okay? Fine. Next. Expectations for the stock for technical. What are the expectations tomorrow for the stock in terms of the options markets? Right now, the option market is pricing in, as of right now, $8.56 in movement. So right now, let's assume that the stock closed at $135.50. So if you add $8.56 to $135.50, you get $144.06. And on the downside, $135.50 minus $8.56 gets you to a downside target of $126.94. Which means, in layman's terms, the expectations based off of this movement of $8.56 in either direction is high to low of $17.12. So your expected range for tomorrow is somewhere between 144.06 and 126.94. It's a huge range, especially on a stock like Nvidia, which is $135, that's a really, really big range. Okay, so normally under circumstances of earnings, when you don't have the headwinds that this specific company is facing with regards to the chip, the H20 chip, is you could buy on technical levels in the aftermarket, and you could feel pretty comfortable on it. However, the one caveat with earnings, and this is very, very important, is that number one, guidance makes or breaks a stock. No matter what the EPS is and no matter what the revenue is, guidance will kill a stock. If Nvidia guides negatively, it could potentially be lights out. If Nvidia says they're no longer offering out guidance, that could be almost disastrous for the stock moving forward. Because if a company's not telling you what they're expecting, especially a company like Nvidia, remember, Nvidia is in the top 3 in the S&P by weight. It's in the top 3 in the NDX by weight. It's number 1 in the SOX, or the SOX, the Philadelphia Semiconductor Index. It's in the Dow. It's in everything. So this company is just as important at this point as Apple and Microsoft. That's how important this specific company is. So if they say anything negatively, Thursday could be a bloodbath. And what I mean by bloodbath is not that we're going to be down, for the whole market, down 5%, but this could take down market down 1.5% easy. If it could 1%, Nvidia could take it down, the entire market. Could the market ignore whatever it says and do what it's going to do regardless, and Nvidia just lives in its own world? It could. It's highly unlikely just because of the weighting of this name. This name is so important to the market. Okay? So, a couple of ways you could play it is, remember, if you're going to do this, number one, remember, you're going to need to use, at a minimum, anywhere between a $9 to $10 stop. But I'm going to tell you this one big but with a caveat. If you are not a person who's investing in this company, do not take this stock into earnings. You should never ever take stock into binary events. Binary events are a disaster. They could really, really, really hurt you. So the best advice is just don't do it. If you want, you could do options. It's premium paid. That way you don't have to worry. Okay? That's your risk. Your risk in options is premium paid. Now, if this stock, for example, has a big number based off of the expected move of $8.56, you're talking about the stock being placed somewhere around over here. Right around over here, which would put it basically at the February 18th high. Right around here. Okay? If we get down to 126.94 on the downside, you're talking about coming into the 21-day, which basically puts it right around over here. Let's make a line so we know what we're talking about. Okay? Let's just get a little technical, a little bit of some. Okay? So in reality, your range is basically from here to about here. Now that's, again, it's $17, so it's a big range. On a $135 name, it's a big range. However, if the stock falls back down to here, my gut tells me that it probably tries to retest 110 and possibly get into this gap at 109. That's probably what happens if the numbers are if the stock gets creamed. Okay? If the stock goes up, maybe there's enough juice to get it to 150. Possibly up here at the 152, 153 area. I think it's a stretch. Honestly, I think they'd have to not only knock the cover off the ball on earnings, but they'd have to literally crush it on guidance. And again, with the threat of, or the possible threat of, new regulations coming out, and especially with the possibility that they're probably not going to get this license for the H20 chip, I think this is a stretch up here. As a long-term investment, a different story. But as a trade, I think you're asking for a lot. I really do. I think you're probably more inclined that the stock probably gets somewhere, if on the upside, probably gets around over here and might sell off to kind of, regroup. Because right over here, you have a lot of cluster over here, so there's not really much here. And down here, if it were to get down here, let's just say, you're falling into almost the middle of nowhere. So to a large extent, let's just be realistic here. The stock on a bigger picture is really in no man's land. I mean, there's trades here, don't get me wrong, but in terms of where could this thing go, it's really, and it's had a big move off the April bottom. it's really in the middle. It's a tougher trade. However, I laid out for you what's the best course of action. Again, do not take stock into the event. Do options. Do not carry stock, especially stocks like this, into binary events, because high beta tech names can hurt you very, very badly. I wish you all good luck. I hope that whatever you do, you're successful at it, and I'll see you on the next one. Take care.